Hey everyone, Dalton Grados with Grados Capital here, and wanted to just briefly go over what's been happening in the S&P 500. And as you know, last week we took quite a dip all the way down from all-time highs of around 4,200 to a low of 4056. And after that we rocketed way back up all the way 4183, which is probably about 40 points shy of our all-time highs. Now we've been consolidating, and as you can see here today, kind of sold off in the end of the day, closed at 41.27. Okay, so if we look at the bigger picture here, we bounced off a 50 EMA on the daily, bounced straight up into the area of resistance here on the 9 SMA and 9 EMA. I know it might be kind of difficult to see with all my lines here. In fact, if I go to ES futures, you can see it better. And so yeah, we've been hovering right out in this area, had some resistance, and now we've fallen. And it looks like the ES futures, as I'm making this video on the evening of May 18th, are trending even lower after today's close. One thing that I'll also bring your attention to is the VIX. Now this is a daily chart. You see we have a downward pattern here, that the spikes, the most recent spike being right here, actually respected that pattern. Now we're getting a little rise again. And so is the market in for another leg downwards? Well, I would say that the key area to watch on SPX is 4100. And really even below that, around 4075 here on the 50 EMA, I could see us retesting that area, retesting the 4100 to 4075 area around here. And VIX could also retest this channel. And that will be a key area to watch for. If we break below 4100 on the SPX, then we could see lows as low as 4,000. Now if we came down to around 4,000 level in SPX, that would be about a 5% correction from the all-time highs of 42.38. So that's a normal stock market correction, okay? These things, 5%, 10%, 15%, are all normal levels for stock market correction. And so dropping down 200 points from all-time highs is actually going to be pretty healthy for the stock market if we see it around the 4,000 level. Below that, a 10% correction could bring us in the 3,800 range. That would be perfectly normal and healthy and much overdue for this stock market. So that's it for today's update. The stock market is rejecting some of those EMAs that we bounced up into the past few days. Watch that 50 EMA level, watch the 4100, 4075 level, and we could be due for a much needed correction in the stock market. Again, don't forget the fundamentals of what's actually going on in the news. It looks like the Fed pump is sort of running out of steam, and investors are starting to realize, and the facts are starting to show us, that inflation is here and it's a reality and it's something we're going to have to deal with. We are sort of hearing mixed signals from the Fed, with one Fed president saying, you know, we actually need to taper, and another Fed president saying, no, we're sticking to our guns. So let me know what you think in the comments. If you like these stock market updates, don't forget to like this video with a big thumbs up there. It helps the YouTube algorithms. Comment below, subscribe to the channel, hit the notification bell, and also follow Grados Capital on Instagram. I'll see you guys next time.